It's a big day for the e-commerce pet supply company Chewy as it's set to IPO this morning. Let's head to the New York Stock Exchange where Adam Shapiro is standing by with the CEO of Chewy, Sumit Singh. Adam?
Yeah, you could say the exchange has gone to the dogs and the cats and the parakeets and all the other pets, but want to give you an indication right now that we expect Chewy, when it starts trading, it's going to be somewhere between $26, $29 a share, and it was priced at $22. So this is going to be a big day for Chewy, and the CEO, Zach, as you said, Sumit Singh, is joining us live here on Yahoo Finance. And congratulations, it is a big day for you.
It's a tremendously big and exciting day, thank you.
We're going to dive into all the numbers. We're going to talk about 85 million households in the United States are pet households with pet parents. But I want to read something to you because Yahoo Finance reached out to SimilarWeb. Those are the worldwide website global aggregators of data. And here's what they said about what you've been able to achieve in the last 2 years with your web footprint compared to Amazon.com's pet category. Fact is, Chewy caught up to Amazon, and based on our data, it generates more traffic than Amazon's pet category. It's all about growth, and in fact, it seems Chewy outgrew the competitive set. Can you sustain that?
You know, pets is the only category outside of kids where consumers refer to themselves as pet parents. There's a necessity, a desire to sort of engage and take responsibility here, and we're pet parents. And on the other side, talking to pet parents. So in the way that we engage customers, and then look, we're only 10% penetrated from a household point of view in the United States. There's a lot more growth in front of us. The way we engage and retain customers spins the fact that 90% of our revenue comes from repeat customers. 2/3 of our revenue come from subscription programs like Autoship. There's a lot more in front of us than behind us at this point, yes.
Okay, so let's break down the numbers because it is about growth. And at the end of the day, the investors today are going to want to know from you, how do you make money? You had $3.5 billion in revenue last year. You lost $268 million. And some people would say you're already at scale. I mean, 67% of your sales were those Autoship customers. How do you grow that?
Let me say two things there. First of all, we are a growth-minded company. Cash flow has been the governor of our growth, and we've done a phenomenal job, in my opinion, the team behind us, with growing at the rate that we've grown while keeping cash neutrality in perspective. So we've got a lot more growing to do. Number two, think about it this way. As we've grown big fast, we've also gotten fit fast. Our gross margins have expanded, 500 basis points over the last 3 years. Our net EBITDA losses are down, and we're focused on building experiences and getting as many customers onto our platform, because when we do this stick, it makes total sense. We like it, customers like it, our investors like it. We're going to continue to do a lot more of this.
Two things about what you just said that I think stick out to investors: negative EBITDA down, but you also talked about gross margins, roughly 20% at this point. How do you price compare, for instance, with an Amazon? I just, for fun, went online and you're selling the same bag of, for instance, Blue Buffalo Live Protection. It's $46 a bag for, I think it was the 30-pound bag, as Amazon.com, as PetSmart, as Petco. How do you beat them on price? It doesn't seem you can.
Two things happen. So first of all, we price competitively to the industry. Two things happen in the way we see customers engage with us. A, they build baskets with us, right? So the same box has a lot more stuff going out there. And then two, consider the fact that we have predictability in revenue from an Autoship point of view that actually helps tighter forecast, tighter supply plan, run our factories in a more efficient manner, and really, drive a dense baseload of demand into transportation to our customers. That's how we make it work.
Well, when you talk about efficiency, though, 67% of your sales were the Autoship customers, the renewal that you have going. Haven't you already kind of peaked at that point? Aren't you already mature? And if you are, you've captured more than 50% of the online pet care market in sales, $6 billion market. You had $3.5 billion last year in sales. How do you grow that? You're already there and you're still losing money. How do you turn that around? Where's the efficiency going to come from?
Look, we actually have been growing. 2016, that number was 62%. 2018, that number 67%, right? And look at the core inputs of that. We're growing assortment constantly. We're getting better at talking to our customers, understanding what they need so we can build baskets. Let me give you an example. When you call us and you have let's say a 6-year-old chocolate lab, our customer service agents might lean in and say, oh, at age 7, they sometimes develop hip dysplasia, right? Are you subscribing to Cosequin? Cosequin is a repeatable product, and we just built you 2 Autoship subscriptions together. It's a tremendously powerful proposition in the way we think about it, and that's how we grow that number.
So when you were citing, though, as I was talking about the 67% sales from AutoShip, you expect that to grow in 2020, 2021, and is that going to be the efficiency, or are you going to have to be able to beat Amazon, which would be a tall order on price comparison?
We're going to do a lot more of the same. So think about it this way. When our active, engaged customers are profitable to us, right? And so we've got to, as our active customer base expands, that proposition becomes even more tremendous. Number two, we're investing in building our private brands. We've gotten into healthcare where we're really wanting to partner with veterinarian practices as well as pet parents. All of this allows us to expand and build a one-stop pet shop that's more meaningful to pet parents in the way we think about it. That's a good proposition to us.
I wish this had been around when I had my dog. The dog's name was Mushka. But let me ask you this. I couldn't help but notice, standing on the balcony when you rang the opening bell, was the chairman from BC Partners. You're going to raise over $1 billion potentially today. How much of that is BC Partners, the owners of PetSmart, going to allow you to put back into the business? How much are they going to take off the table?
Look, primary, we're taking away about $120 million of it, and we're happy with that.
Does it send a signal, though, to investors when they see the chairman from BC Partners and then they look at the fact that PetSmart is going to retain, 70% of the stock, 77% voting potential of all of this, that BC Partners might have different plans for going forward, that maybe they're exiting and going to leave you out as an independent?
Look, I can assure you, BC have been phenomenal sponsors and partners. They're long-range minded, and they're, in my understanding and expectations, the shareholder interest and BC Partners' interest is fully aligned here.
So let's talk about another score that you've hit. Your conversion rate, according to SimilarWeb, is 9%. Now, that sounds low to some people, but that's actually, you're in the big leagues at 9%. Can you get even better? That means the customers coming to your website are buying, and at least the web folks seem very happy with what you're doing there.
We're constantly working on improving, our product interaction and investing in technology to improve experiences for our customers. Right? We're investing in mobile app, we're investing in AR technology, we're investing in security, we're investing in better creative solutions that allow customers to find and discover and search their products in a meaningful manner and have a really enjoyable, simple, curated experience. We're going to continue to do a lot more of that.
And yet you're going to face the competition, and I keep saying Amazon, but in the data set we requested from SimilarWeb, we looked at PetSmart, Petco, and Amazon.com's pet category. And one of the things they talked about was overlap, that when people come to Chewy, 40% then go to Amazon.com to price compare. So I come back to that question about how do you beat Amazon on price?
Well, look, this is a category where you build experience. And price and assortment and the proposition of having a predictable delivery is fundamentally important. But what's also important on top of that is how you're engaging customers, how they're engaging back with you, how you're building these relationships. Think about it this way. The fact that 90% of our revenue comes from repeat purchases allows you to say that the engagement that we build fuels loyalty. Loyalty fuels that repeat purchase, and we just need to do more of that.
And in fact, you actually send thank you notes to customers. When pets do pass on, you send flowers.
We build experiences, right? We send you welcome cards, holiday cards, we send you pet portraits. Thousands of local artists across the country who partner with us to send hand-drawn pet portraits to your house. You can't buy these. These are total surprise and delight. And when they do, they drive dinner table conversations. They drive a network effect to us. And unfortunately, sometimes when the pet passes away, we send you flowers. So we're with you throughout the life cycle of your pet and make that experience more meaningful for you.
So as we look at the experience, a lot of predecessors have tried to do what you're doing. What do you do differently? Because experience alone isn't going to close the gap that you have with losses.
It's a large industry, $70 billion growing. We are out there to create the most convenient, trusted destination for pet parents everywhere. There's a lot to do in that, creating that one-stop pet shop.
And the critics who would point out, as I kept saying to you, about price comparing against an Amazon.com or even delivery, you've got warehouses that allow you to deliver product within 1 day to 80% of the country, 2 days to 100% of the country, and yet Amazon can do that within a couple of hours now.
This is a category, we believe the compelling proposition of 1 to 2 day that we offer is tremendously sticky with our customers. Because remember, for 2/3 of my revenue, I know when the box is going to go out and when it needs to be delivered to a certain household. Secondly, it's not necessarily a category where customers wake up in the morning and say, oh, I need my catheter delivered in 2 hours. So the reliability, the predictability, the consistency of our delivery in the caring manner that we deliver is a compelling value proposition in this category for us.
Okay, and now I want to have a little fun with you. You're a pet parent. Tell me about your dog. Is this your first or one of many you've had?
It is our first dog. His name is D. He's a Shih Tzu and he's 4 years old.
And any stories? I mean, I had a dog that would not leave our side. Mushka would never go away. What about D?
D, my 3-year-old, considers D as our brother, so they're inseparable. He's very much a part of the family.
What does it mean to you when you get home? Does the dog jump up all over you?
It's between the dog and the kid, actually. You can't keep both of them off, and then it's prioritizing one or the other. It's fascinating. It's fantastic.
And as we wrap up with you, I mean, I'm looking back at the indication now, $28, $30. The most important thing you want people to know, I've talked a lot about the investors. I've asked you about VC partners pulling money out. I've asked you about, why be independent when you're going to have PetSmart still control this company. What do you want investors to know?
We're playing in a large industry. We're creating meaningful experiences. We're growing fast. As we're growing big fast, we're getting fit fast. We have a lot more growth in front of us. And we're creating a one-stop pet shop. And I think our investors are totally aligned in the way that we're going to think about this.
And the concerns that some have that you might already be at scale and that it's going to be very difficult. I mean, there's the old joke that I lose on every sale, but I'll make it up in volume. What would you say to the people who are going to say that to you?
10% penetrated from a US household point of view. And our share of wallet constantly expands. In 2018, our cohorts were on an average $334 share of wallet. But we've shown that when customers stick with us 5, 6, 7 years, that number increases to $700, $800. So not only are we penetrating deeper into the US household population, we're also increasing share of wallet. And don't forget, private brands, healthcare, the adjacencies of complementarities. And then, when the time is right, we'll think about, extending our platform to wherever pet parents live. There's a lot more growth in front of us.
Sumit Singh, it's great to meet you. It's great to have you here on such a big day. And again, the indication is anywhere from $28 to $30 when you start trading. We at Yahoo Finance wish you the best, sir.
Appreciate it. Thank you very much.
You're welcome. I'm going to throw it back to you, but again, we expect the trading to start around 11 o'clock, and we're going to be here to keep an eye on it for you. Back to you.
Awesome. Thanks so much, Adam. Appreciate it.